Today, we have two experts from the banking and investment side to discuss how COVID is impacting the Israeli tech sector and tech investment generally. First, it's my pleasure to welcome the CEO of Ely Capital, Hope Taitz. By way of introduction for our audience, Hope began her career in M&A at Drexel Burnham, then continued on to serve as managing director at Crystal Asset Management before founding her own money management firm, Catalyst Partners. Hope now acts as an investor and advisor with expertise in media, technology, and the consumer, and helps innovative enterprises grow through financial leadership and connections to established corporations. Hope, welcome.
Thank you for having me.
Our pleasure. And
namaste, namaste, as I said at the AIPAC conference.
Well, namaste to you too. And our returning champion. We're also joined by the chairman of OurCrowd US, Alec Ellison. Alec, for those that don't know, serves on AIPAC's National Council and is our AIPAC National Tech Chair. He spent nearly 30 years as a tech investment banker, including 15 at Broadview International, and he was the president of Broadview when it was acquired by Jefferies. At Jefferies, he was the longtime head of tech banking, and as well as being the vice chairman of the firm for 8 years. He has been active in the Israeli tech scene since 1996. Alec, welcome.
Thanks very much. I had to unmute there. Thank you, Justin.
Before we begin, I just want to remind everyone that this conversation is off the record and closed to the press. And I'd also like to urge anyone who has a question throughout the duration of our call to either type it into the chat box or feel free to email me directly at jgoldberg@aipac.org. That's JGOLDBERG at aipac.org, and we can get to those questions later on in the call. Okay, let's get right to it. Obviously health and safety of everyone are the primary concerns right now, but this global pandemic and the governmental responses will have long-standing economic effects. How is this new normal impacting startups in real time, and what can they do to adapt? Hope, let's start with you.
First, before I begin, I want to say to Alec, my condolences. For anybody that doesn't know, Alec lost a former colleague yesterday, and I think as all of this is touching so incredibly, we have to be aware and be grateful. And Alec, you have our deepest condolences. So that's the first thing I want to start by saying. Listen, I think one of the things that's impacting, let's start about the fact that I've spent, and Alec and I can both talk about this, we've spent our lives modeling companies up and down the capital structure. I don't know how to model this. When are we going back to work? How are we going back to work? Are we changing our patterns of how we're going back to work, where we're eating, what we consider to be safe? Is it going to happen regionally? Is it going to happen, it's not the Wizard of Oz, come out wherever you are and the Wicked Witch is dead. So I think the first thing is that this is not a situation that any of us have ever dealt with modeling. Many of us have dealt with many scenarios that have stopped business in its tracks. 9/11, I think, is one of the things that stopped business in its tracks. But if you really look at 9/11, it stopped New York, Boston a little bit, and San Francisco and DC, because that's where the planes were. But the rest of the world went back to work very quickly. Modeling the return and how businesses will really change is the first thing that I think is so unbelievably hard to do. And so for my advice has been to every company that I sit on the board on, every company that I invest in, let's start with modeling zero revenue. And I mean that in let's not run the best case, the worst case scenario is nothing. I got this morning a pretty interesting run on spending across the board, and it shows you patterns on airlines from 3.7 to 3.24. Airline spending, sorry, I got to take my glasses off, went from going down 28% to down 102%. What do we think is going to happen to the airline businesses? They're going to get bailed out. Cruise lines were already down 68% on 3/7. They're now down 113. Do we think the cruise business is going to survive? We know that it's not going to get bailed out because most of them are foreign. How are we looking at the businesses? So somebody who covers consumer, it's a very evolving situation in how we model. Alec, do you agree with that? You want to jump in on that, on the modeling side?
Yeah, no, I want to start. First of all, thank you for the comment about my former colleague, Peg Broadbent. Peg was the CFO of Jefferies, with whom I served on the executive committee for 7 years. And as Hope says, it brings home the human and health aspects of this crisis, which is another dimension in which this is fundamentally different, as was 9/11, but this is so open-ended. I also want to just do a quick shout out to Jim Scheinman. I don't think Jim's on the call. Jim is one of our venture tech leaders at Maven Ventures. You should know Jim because he was the seed investor in Zoom. So, so a thank you to, he wasn't the only investor, but he was the seed investor. So Jim's been very active in our venture tech effort. On Hope's point, the zero revenue point is spot on. And this is very much how we are advising, and I think every venture investor, Israel, US, anywhere in the world should be advising their companies. Assume no revenue. Yes, you may have subscription revenue and contracts that provide recurring revenue. But by the way, your counterparty to those contracts may go out of business. So just because you have a contract that you think gives you monthly revenue, don't assume it doesn't disappear. We have never seen anything like this. In fact, that's what makes a crisis. A crisis is typically when there isn't a familiar playbook to go back to. And that was true in my and Hope's careers in 87, 2000, 2001, that many of you, I'm sure, also experienced, and of course, 07, 08. But you can go further back in history. On the positive side, before I get to the negative and how to manage through it with this type of zero revenue assumption, this is not a war in the sense of a World War II or World War I. Those of you know me know I'm a total history fanatic, because in those circumstances, you have human ingenuity fighting each other and it continuing to escalate to think, how can we hurt the other person? Here, on an optimistic note, you have humanity pretty united. I'd say remarkably united in fighting a common enemy, a brutal enemy, but a common enemy. And that was what I find so encouraging. And we'll talk later in the call about some of the companies, particularly in Israel, but more broadly, that are competing with each other at speed to battle this this threat. So on a positive and hopeful note. As it relates to in terms of the assumption, it's going to vary by industry, but you have to manage your company assuming the economy is shut and your revenue is shut for a while. And as we keep telling our companies, that is nothing to be embarrassed about. If you have 6 months of cash or 12 months of cash or 3 months of cash, guess what? Every airline in the world has 3 months of cash or less, or they're out of business, or a cruise line. So it is nothing to be ashamed of. The issue is, will you get bailed out? You won't get a big government bailout, but through the CARES Act, there are now loans to assist companies in Israel. Halat is a program that is better than our own unemployment insurance that allows individuals to be furloughed and to stay as employees of the company and then hopefully come back in a very smooth fashion. But again, these are unprecedented times, and one must manage with the mantra of plan for the worst and hope for the best.
Alec, can I add to something you just said about not being ashamed? I actually think that what you do in terms of preserving capital and how you are cutting costs internally, you will be rewarded for. Because I think as an investor, people are looking at how carefully you are managing your expense side of the business. And I think in addition, they are really assessing your leadership capabilities. Yeah. So the leadership and expense management, which is something you don't really think about as much in the venture side of the business, I think are going to be incredibly well rewarded as you come out in terms of understanding and how you deal with the human capital side of your business.
Yeah. we put out a memo to all of our CEOs. We've been communicating with investor CEOs, general partners, as you might imagine, but to all of our CEOs, we called it the fight, flight, or freeze memo. People are probably familiar with that phrase. It's our visceral response to physical threat that's in our DNA. We all feel it in this crisis even more so because there is a physical threat to us. It's not just economic. Everyone feels it. And we do see CEOs that are frozen and they need to be pushed to fight. Fight means being decisive. Fight means deciding to drop markets where you weren't or you in the future won't be able to have a compelling offer or to acquire customers at a reasonable cost. It even means fleeing some markets, but you don't want, of course, to flee all your markets. But I think that metaphor is particularly appropriate in this crisis as opposed to prior crisis we've sought to live through.
So I just want to jump in here and kind of move things, not just from the company side, but from to the funding side as well. And I know I didn't mention it in the introductions, but if it wasn't readily apparent to everyone on the call, we've got Wharton and Harvard Business School here talking to us. So I just kind of wanted to note that you both have been very bullish on the Israeli tech sector. There's been long-term growth year over year, both in venture funding and foreign investment. And obviously things are extremely volatile and uncertain right now, but what are you seeing? What are you hearing? And I guess maybe more appropriate, what are you anticipating regarding, I guess, that trend in just growth year over year from a venture funding and a multinational tech investment from the US side?
Hope you want to start or you want me to?
You can go first.
Look, I think Israel will come out of this in a relatively better position than it went into it, okay? Even though everyone is going to suffer. Why is that? Israeli companies tend to be better with, more efficient with their capital. That's unquestionable. They are very good at problem solving. That's why people are investing in Israel, and we'll talk later about how much more we're seeing even the late stage private equity folks setting up shop, which was happening increasingly before this crisis. We even saw a cybersecurity deal for over $1 billion 2 weeks ago today on March 16. Hellman and Friedman buying control of check marks from Insight Venture Partners, and Insight did another $1 billion plus deal earlier this year. So while it's going to be very ugly, I think Israel will actually come out of this better. I always like Warren Buffett's metaphor about when the tide goes out, you see who's swimming naked. I think more appropriately, you see where all the rocks are and you see who can't swim. Israelis are really good at crawling back to the beach and figuring out how to survive and ultimately thrive, but it will be painful there as well.
So I'm going to add to that Israel, probably more than anybody else, has been through something where their world has been shut down, Scud missiles, etc. They have shown tremendous resiliency. So the Israeli mentality of resiliency, it will shine. I think when you talk about elite, army units and what they're building technologically, they also have tremendous leadership in those companies. And that resilience and the ability to rally the troops, and I go back to that human capital side and the conversation that humanity is united. Israel knows how to do this. And in fact, Israel knows how to get up from disaster and make changes. The next thing I think is so different about Israel is that what they do is they tend to solve for problems that exist, right? So go back to the earliest days and irrigation, right? Israel is the first one to get creative to try to solve for needs. And I think they're thinking and seeing what's going on, and they're already thinking ahead. So resilience, leadership, and experience in having been, unfortunately, bunkered down.
So, you're both investors. What are you looking for right now, other than resiliency? But when are you looking to make deals? When are you looking to activate capital?
Well, look, it starts always with the individuals, and the individuals are even more important now. It doesn't necessarily have to be someone who has a great track record. I always like to point out that one of the things Apple, Facebook, Microsoft, Amazon, and Google all have in common is they're all first-time entrepreneurs. So it doesn't necessarily mean that someone has to have a track record to back them, but you want to really assess the individuals and how flexible, how problem-solving oriented, to Hope's point, are they. The second is there a corona angle? And that isn't necessarily just in healthcare. And what I mean by that is we have already been seeing an allocation of resources to the virtual world, if you will. That's over the last years from the physical world. The physical world perhaps best represented in the oil industry, where capital has been leaving. That is accelerating. That's why we're seeing $20 a barrel or under $20 a barrel oil today. This crisis will accelerate that. So looking at companies that will capitalize on that, and that can be in many, many different industries, but it will accelerate a trend. I've been pointing out in this crisis, unlike 2000, unlike 2008, where we had misallocations of resources, in one case to dot-coms and telecom, and the other to real estate, that had to be addressed. There hasn't been a misallocation of resources that has precipitated this crisis. However, there will still be a reallocation of resources to certain segments of the economy, and we're trying to think very seriously about those trends across all sectors of the economy.
And I'm going to add to that. I mean, again, I think it always goes back to the individual and that sense of leadership. There's going to be a new way that we all interact, right? And how we think about things. Are we going to go to the bank in the same way we did before? People have talked about cash being dirty, right? And should you put on gloves when you get cash? I'm looking at interesting things on the banking side, paying people, all the payment systems, all of that I think is going to be fascinating. Data will continue to be at the forefront for everything. Get the more data we have, and even if anybody's listening to any of the briefings, the more data we have, and the data scientists and companies that are, processing data, hugely important. Shipping, stocking, and where AI fits into all of that, massively important. So again, if I think about my consumer side, the consumer is still there. The consumer is buying. We see, again, in that data, the one thing we have is we have groceries going up. We have some of general merchandise going up. That's happening. But the question is, who's doing a good job stocking, the data analysis of what's being needed to be ordered, et cetera. All of that, I think, is quite interesting area. And Israeli companies are doing some amazing job in those three spaces.
Yeah, Hope's making a great point about AI and data, and I would wrap into that as well, IoT, Internet of Things. The amount of data coming now from sensors. We can all envision sensors that are taking people's temperatures. And other types of health-related information. So we're going to see the continued explosion of data that's coming from the sensors, and AI is a must in terms of how to process that and how to tackle new problems. And that will, again, this trend is already happening, but this will accelerate it.
And I think it's also going to push, Alec, it's not only going to accelerate it, but it's going to push people to be thinking forward, which is, how am I protected if this happens again? We all think there might be a vaccine or whatever, or plasma to help short term. What happens if this happens again? I think.
Look, it has happened in the past with things like SARS. It was just contained.
Correct.
Like Bill Gates have been talking about this for a decade. That this could happen, and we fundamentally had a market failure. WHO has said that we didn't have enough capital allocated towards sensors and other monitoring technologies to be able to contain this. And there will be massive amounts of capital allocated in that sense. In fact, one of the metaphors we're using at OurCrowd is we think we may see the most significant shift in allocation of resources since the creation of the military-industrial complex, which came out of World War II. Why did that happen? Because in World War II, we had between the wars, the West, US in particular, had put its guard down and wasn't prepared. The key word is prepared. There's going to be a massive allocation of capital towards all types of preparedness, whether it's communication services, medical devices, medical capacity, sensors, et cetera. We could go on, but that's the type of shift we're thinking about, that it hasn't happened in 80 years.
And let me add one other thing, Alec. I think it's, we've had interesting conversations about workforce productivity. Okay. And I think you're going to see, you're going to measure workforce productivity in a very different way. Who in your workforce is getting their work done remotely? Do you need as much physical space? What technology do you need versus what physical space you need to operate? And I think people are going to look to systems that make them more efficient in every way, shape, or form, and data.
Yeah, who doesn't have kids running around the house they're having to homeschool while they work versus who does?
Listen, I offered to teach on the weekends to help out my friends because I have older kids. So yes,
No, this point about real estate is an important one. Commercial real estate. Leave aside the leverage issues that are there right now. We may all realize we don't need as much office space. Just like you might realize we don't need as much business travel. Even if travel recovers, business travel, which is the most profitable, may not recover. May see a real secular shift.
I want to jump back in here because obviously you're getting into some of the sectors that you're a bit bullish on right now, and some maybe not so much. But the last time the global economy experienced a crisis of this magnitude, we saw the birth of many well-known companies that kind of originated out of there. Uber, Airbnb are just two that come to mind immediately that fundamentally changed the way, the sharing economy, so to speak, it was a boom over the last 10 years. Let's stay with this positivity hat for a second. Alec, you mentioned a little bit, or maybe I think it was Hope mentioned before, some specific companies that they're looking at right now. What can fill that void and kind of come out of this a little bit more positively?
Yeah. First of all, we may see a bit of a reversal in the sharing economy. It will not surprise me if WeWork goes bankrupt. The issues they've had compounded by the broader real estate issue we just said. Airbnb is in an absolute crisis. And of course, Uber and Lyft have been hurt significantly, probably more resilient. But the idea that they're all based on proximity. What I think may replace it is the monitoring economy. In all types of ways in which we are having to monitor our physical space, workspace, home space, ourselves, our health, a broad variety. I can't give you all the possibilities, but I'm sure there are many entrepreneurs thinking very much about this dynamic.
Let me add a couple of things to that. I think Alec is completely right. Though, did anybody see that VIA got a $200 million round that closed today? Valuation at 2.25. So they're on a sharing. I would not have believed that a sharing would be doing well, but they have been showing about helping out and helping transport doctors, etc. It's an interesting angle that they've taken as well. But let me tell you a couple of things that I'm now more bullish on. I turned down some telemedicine deals originally because I was very worried about the risk of misdiagnosis. I think we are going to change how we look at telemedicine. I'm an investor in something called Talkspace, which is telemedicine for the social worker or psychiatrist, different mental health issues. I think it is going to change. So I think that the telemedicine side of the business, I am exceedingly bullish on data. I'm exceedingly bullish on IoT. I'm exceedingly bullish on interacting commerce and sports, right? So there are some startups that you can interact and buy something you see on a television. There are some that are interacting, IoT companies that are interacting with sports, so you can be predictive about making a basket. People need to be entertained at home as well. Some of the media is interesting. I'm a little concerned on some aspects of it, but people are looking for activities to do. And I'm also really, really bullish on automated shipping of any type, because I think that is changing dramatically.
Part of my monitoring point relates to diagnostics. We obviously we've seen the tests that are coming out. A new one announced this weekend by Abbott. One of our companies that we invested in 6 years ago, it was founded 9 years ago, called Site Diagnostics, People have heard of Theranos. Site was deemed the anti-Theranos because they actually developed a system that could do a CBC, comprehensive blood count, with 2 drops of blood. They got FDA clearance this past December, and they were very much celebrated at our Global Investor Summit only 5 weeks ago, which feels like 5 years ago. We'll be quick plug. We'll be doing another round that'll be available on our platform very soon. But a company like that was already addressing a need, the ability to do low cost, 10-minute reporting instead of waiting for your blood to go out for a couple of days, and therefore your treatment had to wait too, now being accelerated because of this crisis.
So I kind of want to give the audience a chance to interact here for a second. Last week we did a poll. We actually want to throw up a poll right now for our audience. Speaking of what Israeli tech sector are you the most bullish on for the members of our audience? So while we ask that, and while we put that up there right now, I want to go to some of the comments and questions that's been added. Alan Fisher makes mention of the Chinese. I guess let me kind of repurpose that into a question a little bit. Since it looks like China is now out of the woods, or at least getting out of the woods, what kind of an advantage do they have right now as it's relative to the rest of the world from jumping into deals and funding?
Well, look, they're not out of the woods. They're slowly coming back, as I think we're all seeing. Look, they have an advantage, which is a scary advantage, which is a repressive society that can control people more. And people like Harari from Hebrew University have written about, we need to be very careful about entering an age where we have governments justifying more repressive treatment in order to control pandemics. But that is serving as an advantage right now. It's why they were able to contain it with, if you believe their numbers, under 100,000 cases in a population of 1.3 billion by locking people down in a fashion which would never have been legal in the US. So that's more from I'll call it a political system perspective. From a funding perspective, they have, their economy is smarting. They are the world's manufacturer, but those supply chain structures are now being questioned. You will see all kinds of US and European firms diversifying their supply chain or moving it out entirely from China. They'll never be as dependent on China as they were coming into this crisis. But it's not all competition. There's all cooperation. I know it's really interesting. A company in Israel called MyHeritage, which you may know is from their number 2 in the world behind Ancestry and number 1 in non-English speaking countries for genealogy software and DNA testing. They are actually ahead of a 23andMe in terms of their size. They just announced on Friday a partnership with a Chinese company that will be using their DNA testing system to test 10,000 Israelis a day. And they've got 25 Chinese on their way to Israel right now who will be exempt from the 14-day quarantine when they arrive. So it's not all competition with China. They do have certain advantages, but I think we will see, as I started at the outset saying, more human collaboration in general, recognizing the commonality of this threat.
Yeah, I mean, they're going to continue to want to find partnerships and solutions. And Israel is, they've come in to invest in Israel because of Israeli innovation. And in my opinion, this is only going to showcase Israeli innovation, and assuming that they have capital. And I think there are other places besides China. Let's talk about Singapore. Singapore has done a really good job, and it's fairly contained in Singapore. They lock their borders pretty well. They're, the sovereign wealth funds, there's capital coming out of there because they've done a pretty good job of protecting. So I think it's not just China, it's the whole area. And I think it's take a look at who's done a good job, and then take a look at the fact that they still 100% need innovation and what's coming out of Israel.
And Israel can walk a finer line with China than the U.S. can. In fact, look, Israel has to walk a fine line between China and the U.S., which is the most important ally, of course, and Russia. Picking up on Hope's point, we have 4 incubators at OurCrowd in Israel, 1 outside of Israel, and our food tech incubator in Kiryat Shimon in the north. Our 2 partners are Tenuva, which is one of the 2 largest Israeli dairy companies, and a Chinese company. which was accepted. This is all good, a government-backed food incubator where they provide a lot of our capital. And they were very accepting of us having a Chinese partner when we won that tender last year.
So you both kind of touched on this a little bit, but I wanted, if you can drill down just a little bit more on how the Israeli tech ecosystem emerges relative to other parts of the world after this as well.
Yeah. Well, again, I use the metaphor. It's like how JP Morgan emerged relatively better than other banks after the financial crisis. They were already a leading bank, but they became a leader in almost every market. But I think it comes down to what Hope was saying. It's about the people. And I would also throw in the capital efficiency. Hope was talking about the people. And look, Israeli companies have often attracted capitals. People get immediately that Israel is used to existential threats. Starting a company doesn't seem very risky if you grow up in with the mentality that you could be attacked any day, any week. So it really does come down to the people. And I think it also comes down to government policy. We haven't talked about that. The Israeli government recognizes the criticality of the sector. It's a criticality that's not just about economics. Almost half of Israeli exports now come from the tech sector. There's some amazing stats you can see of how this changed from 30 years ago, where those of us can remember Jaffa oranges were the big export. Israel went into this crisis with $100 billion of foreign reserves. Okay, that is almost 30% of GDP. I don't know where that ranks in the world, but it's an astronomical number. So Israel is well positioned despite how powerful, but it will have to deal with the health crisis like everybody else. You've probably all seen the issues with the ultra-Orthodox are refusing to not congregate. Once it gets through the health aspect of this, I believe it is well positioned to come out on this strong relative basis. And I would also argue there's a diplomatic aspect to it as well. Israel recognized that its tech strength is the key to getting the Gulf states to be hopefully ultimately recognize Israel, but to increase the activity with Israel. My partner and our founder, John Mevad, actually spoke publicly at the SALT conference in the Gulf back in December. That would have been unheard of a year or two ago. And we believe we will continue to see more activity because of Israel's tech sector in the Gulf.
So Alec, putting aside the ultra-Orthodox for a second, let's talk about the GPS monitoring of potentially affected COVID patients and Israel's handling of that and how effective we actually think that is, which I agree. They're not worried about privacy issues, right? They're not worried about, they're worried about the health threat and solving it. And Israel has shown from the beginning of time, they're willing to give up certain things to save lives, right?
Yeah, no, I think Israel's the size of a state. It's basically the size of New Jersey population, a little less area-wise similar. And there's still a familial aspect to it. Most Israelis feel they're all part of the same mishpacha, or family, as we say. You know, Israel had many of you are probably aware, last Wednesday evening on the day that the lockdown was going, where you couldn't move more than 100 meters of your house. That was preceded, and this was the eve of Rosh Chodesh Nisan, which is really the second Jewish New Year. It's the New Year of the Jewish people, if you look at it. Precedes Passover, of course, and had a 30-minute national prayer event, secular and religious alike. That could not happen, certainly in the United States. We have a wonderful pluralistic system, but I can't think of many countries in the world where you could have that.
Right. So I think that Israel should come out of this better, together, and actually leading in the fact that create solutions so that they, again, whether it's tracking, etc., solutions to solve, to cure, and I got to tell you, on a personal basis, I'd rather be health-wise in Israel right now than here, even though I'm now quarantined for 15 days. So I'm over the other edge. But I trust the Israeli medical system very much so.
And of course, those of you that were...
What other questions do we have? Or you want to go over your poll here first?
Well, no, I just want to, I want to get to that in just a second. Of course, we for those of that were at Policy Conference. We saw Sheba Health that was there, and of course talking about all of these amazing industries and different focal points of the Israeli tech sector, just how innovative it is. We're about to close down the poll right now. If anyone was on their cell phone, just reminding you to hit submit. But on that note, I want to highlight something Neil Schloss said in the chat here. No mention of cyber. With all these IoT-based products that you're mentioning, where does cyber fit?
Let me just say, I think cyber fits incredibly high in all of this. I sort of took that for granted that Israel is the leader there in so many ways. I think people are taking for granted all of the working at home. And unfortunately, our servers and everything else at home are not as secure. I sit on a number of public company boards. The incident rate and the phishing rates are going up dramatically. So I think cyber goes without saying it's going to continue to be top of mind.
Yeah. And the deal I mentioned earlier, Checkmarks, the $1 billion deal announced March 16th was a cyber deal. It effectively ignored this entire crisis. And I think Hope is spot on. We'll continue to see the investments by U.S. companies there as well. And not in addition to the phishing being an increased area, we will continue to see IoT-related security being incredibly important. One of our companies, Nanolock, secures at the memory level in IoT, which was a revolutionary approach to security. We got a deal done a few weeks ago, a company many in AIPAC know very well, BioCatch, which we'd invested in initially in the round, I'll say 6 years ago. This round was led by one of the top PE firms. They put that $100 million, $50 million primary, $50 million secondary. We featured them at an AIPAC event in December, and they provide behavioral biometrics, which is summarized very quickly. It's your phone can be hacked, your password can be hacked. What nobody can hack is how you move a mouse and how you move a keyboard. And so the more remote we are, it's not just going to be in the banking world where behavioral biometrics, where someone can have that unique signature. It's going to be in healthcare in particular and other use cases, which is why major PE firm led this new round.
With that as a theme, we're going to be looking to do a call in the coming weeks on how safe are we now that we're all kind of in this digital ecosystem, so to speak. I want to remind everyone, if they want to ask questions, to go ahead and do so in the chat for everyone, or if you want to email me directly, you can at jgoldberg@aipac.org. We got a question over here. Speaking of the stimulus package, is there anything attractive from the stimulus as it pertains to certain industries that you're looking at?
Look, the stimulus package, the CARES Act, applies to any small business with U.S. operations. So from an Israeli perspective, we are focusing every one of our companies that has a U.S. subsidiary to the extent that they qualify for the CARES Act, for the loans that are very low interest and partially forgiven under certain circumstances, including the importance of retaining your employees, that they should qualify for it as well. So that's irrespective of tech or any industry, but it's held for small business.
So I agree on the loans. We are actually going through and I think it's going to change. Some of it's going to change, but we are going through with a fine-tooth comb, and we'll be putting something out with regard to that. But I think small business, and I think in terms of rent and overhead, it's going to be interesting. And in terms of employees, what you can do on furloughing, et cetera, it's really important to go through with a fine-tooth comb right now. Should you be furloughing versus, firing? And I think there are, and it depends what industry you're in, can you get under the cover of some of these industries? So, is Airbnb, for example, going to try to get under the hotel, in the hotel relief? And I think that my guess is ultimately no, but I do think it's really important that people are watching spending. And again, I'm happy to share. Anybody who wants to reach out to me on LinkedIn, I'm happy to share, this data that I'm watching on a daily basis that goes through from airlines to lodging to cruising to entertainment, restaurants, down to just actual total card spend, on healthcare merchandise. It's really important as you look at your portfolio companies or investing, or you are a company, what that data looks like.
So let me just see, at this moment, I'm not seeing any additional questions from the audience. If anyone does have a question, feel free to throw it in there. But absent that, and if there are no more audience questions, number one, let's take a look at the results of the poll. And what do we have here? Okay, digital health seems to be what everyone is the most bullish on right now, and I suppose that's probably appropriate given the times.
I'm surprised about EdTech. We didn't talk about EdTech. I mean, EdTech is also going to become, an interesting area, and I think EdTech in terms of reskilling the workforce. I think it's important to add that point there. You're going to see a lot. We know what the U.S. unemployment is. We're going to see a lot of unemployment, and the question is, what skills does that worker need to get a job? And so I think they're going to see a lot of reskilling opportunities.
Alec, anything to add on EdTech?
I think there have been questions about the higher education business model, if you want to call it a business in this country already. And that model's issues and excess expense is being exposed by this crisis. It's been fed by the student loan system, which is now at a breaking point. And so alternatives for high-end, higher education, high-end education, high skills training, which are going to be, of course, leveraging technology, will be a growth area, and there'll be a lot of for-profit opportunities there as well.
So we got a question here from the audience. Let's start with this one. How do tax stimulators affect private equity companies?
I'm sorry, can you repeat that again?
Tax
Sure. How do tax stimulators affect private equity companies?
I'm not sure I understand the question. What tax mean? Is that
Let's see if we can get a clarification and move on.
Well, let me just, I can,
for now, we've got from Lloyd Fish.
Yeah, go.
No, go ahead, Hope.
No, I will say in general, I mean, Alec and I think both say, I think the private equity guys are very versed at modeling very well. Forget if they get any benefit from this, but they are sitting there running models of, and they're very good at running those models and running the zero and the different cases. And they've been working their whole lives for these kind of days. And somebody made a comment to me that 10 p.m. is the new noon. And that's how long our days are. So I do think private equity will benefit because they are also very creative. And Alec and I have spent our careers creating interesting pieces of paper that fits the need of what the company can, in order for the company to get capital. So I think they are going to benefit.
Yeah, well, Hope's created a lot more of that paper than I am. I'm more of a tech guy, so it's more about equity, not the fancy and sophisticated debt instruments.
Exactly.
But look, there's going to be a culling of the herd in private equity too, if that's part of what the topic is. And some of it's going to be timing, like it was in 08, 09, in terms of where your funds were, because what scares me the most is that we have a breakage of the system. The system broke in 08 or 09, or came really close to breaking. I know, a little historical footnote. What happened, the Crash 29 did not cause the Great Depression. What caused it was the bank runs that started in late 1930 into 31. By the way, it started with a small Jewish-oriented immigrant bank in New York called the Bank of the United States that the WASP establishment let fail. And then there were 300 bank runs within 3 months. Okay, the bank runs are what drove it. And so the entire system came down, and then you had the major Austrian bank come down in 31, Credit Anstalt. So the lesson learned in 08, 09 was you don't let banks fail. They didn't realize Lehman was a bank. They didn't realize the unintended consequences, that it was a bank. The analog here would be Suppose a regional health insurance company that's dealing with massive amounts of health claims fails. And people don't think of health insurance companies as part of the financial system. There are other parts of the shadow banking system and shadow lending system that are vulnerable here. What I'm saying is something I believe our regulators in Washington are well aware of. Recognize that there are parts of the banking system that can trigger a modern day run, the same way you had the runs in 31 and 32. And those have to be kept intact. I remain an optimist, not just because of my point at the outset about human endeavor is united here, but if the system holds together, it can be reliquefied, it can be rebuilt. The real danger is if the system, the financial system somehow cracks because of the stress of shutting down the economy intentionally in the interest of public health.
So Alec, I agree with that, but let me say a big, Justin, you asked us what's a positive. Between 08, the financial systems were not strong. There is tremendous amount of capital out there that can be redeployed, that can be lent. You are seeing deals getting done. There was let's call it the first few days of triaging, and then very aggressive calling lines of revolvers, etc. I think you're starting to see people having run that zero revenue model and then figuring out how they are lending, investing with equity, etc. The capital situation is very different than in 08.
Yeah, no, Hope is exactly right. The system we went into this system in a much more robust way. What I'm simply pointing out is we need to be very careful. There's not an analog to Lehman working out there in some region that could start to trigger things. Fortunately, the reactions in Washington on both a monetary and fiscal basis have been very aggressive so far.
So we have a few more audience questions, and I saw Lloyd Fishman ask something on Medtech that we're going to get to in just a second, but Philip Lieberman asked, are there going to be capital calls for private equity and venture capital investors to keep their investments alive, and which will they keep alive and which will they kill?
It's a great question, Philip. Look, every venture capitalist, whether it's in Israel, the US, or any other part of the world, will be looking at their portfolio and deciding what they may let die, as opposed to kill. I guess just let it die, let it run out of cash, or wind it down. But there will absolutely be capital calls in PE and VC from investors to keep the chosen investments alive. In a crisis, or in any downturn for that matter, most of the capital to keep companies alive comes from the existing investors who are called, as opposed to people who lead new rounds.
Right. I mean, I think that you go, and again, if you need, you go to any on a pro rata basis. But the first thing, and I think we're actually almost past that a little bit, is the first week or two is spent triaging and looking at the portfolio. Who are you going to focus on and who are you not? Who are your leader? What companies show promise, leadership? And again, I go back to expense management, realism, or can make a difference here. And those are the ones you focus, and they will get capital. And you absolutely, if you are thinking about your own capital, you should assume capital is going to get called. I got a very large call on an investment on Friday. It is going to get drawn down. Revolvers have gotten drawn down. You need to assume maximum drawdown right now.
Yeah, and we're using a rule of thumb that we have to reserve 50% minimum of capital for any investment that will need to be drawn over the next, call it, 6 to 24 months, however long this lasts. And if you go back to the 2000, the tech crash, the dot-com bubble, whatever you want to call it, the market really did start recovering until 2003, the financing market. In fact, ironically, the 2002 vintage of funds in the venture world ended up being probably the best in a generation.
Exactly.
So I want to get to this question from Lloyd, specifically what aspects of Medtech are best for investment right now?
Well, I have a view there is that equipment versus compounds. The FDA process on equipment is much quicker. And this could be anything from diagnostic equipment, et cetera, treatment equipment. When you're dealing with biotech or therapeutics compounds, if you will, most of the companies aren't companies, they're literally compounds. and it's a lottery ticket. The process is much, much longer to get approval. And if so, I will tell anybody, if you invest in biotech, you have to be super diversified. I personally, like in the public markets, I will only buy the biotech ETF because Lord knows how to pick an individual company. It's just the same way in the private market. Whereas when you get to equipment in the medtech side, where it's a different FDA approval, you can pick winners and losers much more easily.
And I'm going to leave this one to Alec because it's not an area that I invest in. So the closest I come is telemedicine.
So you agree with our audience, Hope.
Exactly.
That's perfect. All right, so just to make sure we get everyone out on time, I know there were a few other questions, and maybe I can send those to you offline, or if you want to answer them offline. But let's just go to parting thoughts. You know, first and foremost, again, thank you for both.
This question here. I'm sorry, I've seen a question from Frederick Ryan to everybody.
Go ahead.
Remote. Do you see remote work? Big picture. Do you see remote working, in quotes, detrimentally hurting cities after the coronavirus pandemic is cured? I'd say, my view, this is more of a real estate question. Hope you probably can field it, but yeah, all the focus on density is coming home to roost.
I can tell you that, you know, if you look at some of the REITs, the commercial real estate space, I think is absolutely going to be a fundamental change at least in the near-term future. Speaking from Northern Westchester right now, the number of people who do not want to be in the city, whether for work, etc., and the number of people that are demonstrating how efficient they can work remotely, there is going to be a large sea change.
Yeah. Now, unfortunately, I think that there will be a shift. I think New York will come out of this relatively weaker than cities like Los Angeles. All the criticism of Los Angeles sprawl may be muted for a little while, and other Sunbelt cities. And New York will have a very painful recovery, unfortunately.
So I just want to, number one, thank you both. And we covered a lot of ground here. Some parting thoughts, and what can we do to ensure the overall health of the U.S.-Israel tech ecosystem kind of going forward?
Alec, you want me to go first, or you want to go first?
Go ahead, Hope.
Okay. The first thing is realize that Israel is innovative and Israel is not scared. So neither should you be. That's sort of my first parting thought. I think you have to be cautious. This is not a time to, jump headfirst in. This is a time to due diligence. This is a time to really understand who those leaders are. And I think Alec talked about, it's not necessarily, it doesn't have to just be the person that, did a startup before, but who are your leaders? How are they demonstrating? How are they communicating with you right now? I am telling every company that I'm investing, get out a note to your investors. Don't just talk to your board, get a note out, communicate, touch. I think humanity is important. We are united. So look to see who's doing that. Then keep your eye on human capital, how people handle HR and what their businesses stand for and how they're going to get through this. You will remember forever. You will remember the people that called you, that checked in on you, and the same thing about your companies.
Yeah. It's obvious, anybody knows what I do chairing OurCrowd is I have most of my venture focus on Israel versus the US, which is in no way a knock on the US, where I've been a part of this ecosystem since 1984, but is a real belief in the relative intermediate and long-term strength of the Israel system. So I'm a big advocate of investing in Israel, and I've been doing it for many, many years. But more broadly is thinking about these overall themes. You hear all the buzzwords about cloud computing and IoT and 5G and AI. This acceleration towards the virtual world that is enabled by all of these. Whenever you're assessing an investment, make sure you're riding the wave, not trying to swim into it. I've said the following long before this crisis, but I think it still applies, maybe even more so. The 1920s, people have heard the term the Roaring 20s. what the Roaring '20s was about and why the economies around the world, particularly the US, boomed. It was about the application of electricity to mechanical processes. Factory floors changed, homes were electrified, et cetera. What the 2020s promised to be is the application of artificial intelligence to the digital industries. And that megatrend is very exciting. It's experiencing, as the whole world is, a big hiccup. But if the center holds, the center being the financial system, we will see that trend continue and maybe even an accelerated rate because of this tragic crisis.
And I'm going to add one other thing. As your day has changed, as you are no longer commuting or living your life, going out on the weekends, etc. Think about how your life has changed. Think about the tools that are helping you. Think about all the resources. Walk around wherever you are, each day, and think about what technology has done to change your life and what technology you would want to make it even better when you're in this situation. That is going to keep you thinking forward as opposed to looking back. Nobody can change the past. We turn to SALT. Let's all look forward. Let's come up with solutions, and then let's invest in those that we trust the most to be problem solvers.